Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES set a one-tick marginal high and has been balancing within a narrow range. Heading into the open, we have the initial resistance zone at 78.5 to 80, which is the all-time high, and this is a short-term inflection point. The market has been balancing up here for several days, and now in order to break out beyond 78.5 to 80, we need to see broad market strength and sustained upside momentum. So there is potential for ES to break out today, and in the event that it does break out, we have to assess the quality of the breakout and determine if the real-time environment is supporting that breakout idea. So what I mean by that is if ES attempts to break out to the upside, we have to see what the underlying internals are looking like. Is the advanced decline line in positive territory and trending higher? Is the tick holding above zero? Are the other markets also participating in the upside? If those conditions are present, then we know that the overall environment continues to be bullish and we could get an upside breakout. And if ES tries to break out, but we are not seeing any upside momentum, or if the advanced decline line is trending lower, then it could be a failed breakout attempt. The most aggressive area of support is 75.5 to 76.75, and we're going to be using this area as a reference point to determine how strong the market really is. If ES is indeed going to break out, then ideally you want to see it holding above 75.5 to 76.75, and a break below that area would be an early warning sign that perhaps the market is not ready to break out, and then we can retrace back down to 71.5 to 73.5, and if we're seeing excess weakness and sustained downside momentum, then we could even break 71.5 to 73.5 and head down into the 66 quarters, 68 quarter zone. We have an open gap at 68.5, a naked VPOC at 69, and then responsive buyers can be active on first test of the support zones below at 66 quarter, 68 quarter, and especially at 61 to 63.5. So in the event that we get a breakdown below 71.5 to 73.5, buyers can be active at 66 quarter, 68 quarter, but we have to be a bit more careful at that zone if we're seeing a lot of downside momentum. And then 61 to 63.5 continues to be a high probability area for buyers to be active. It marks the short-term balance area low, and it's very likely that buyers will defend that area on first test. So today our short-term bias is neutral bullish, with the idea that the market could be setting up to break out yet again, but in the event that it's a failed breakout, or if we're seeing clear signs of weakness, then given that we're trading near the all-time highs, there could potentially be a short setup available as well. But we just need to be a bit more careful on the short side because the overall environment is so bullish. So in order to short the market, we just need to time it better, we need to have relatively good trade location, and we need to be seeing some very clear signals that there is indeed a lack of strength or some clear weakness in the market. And if we can get in with a 2.5 point stop, or the stop is still above 24.80, then there could be sufficient reward to risk. But again, we just have to see some clear signals in order to short the market, and we need to secure good trade location because that is counter to the bias and trend. So those are the main ideas heading into the open. Let's see if the buy side can maintain the recent control, and we'll take it from there.